at the headline index, beaming and definitely. Good afternoon. Welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lavisha Darad. Well, we have now third straight of gains. Markets have been smiling and beaming, and definitely broader markets. What a smart outperformance from that end of the markets. Now, if you look at the headline indices, Sensex settled with about 100 points gain. If you look at Nifty, also Nifty closed above that 22,900 mark. Apart from that, from the sectoral indices, Nifty IT and FMCG, that were the one which were lagging out. Otherwise, apart from that, all of the sectors stayed in the green. Nifty Realty Index and Nifty PSU Banks, definitely some of the top performers, top sectoral performers for the day. And if you look at some of the gainers, on the other hand, for Nifty, that includes the likes of Shriram Finance with about 4% gains. It has gained for the third straight day. HDFC Life also gaining up for the third straight day with about 3.7% gains. If you look at some other stocks here, Apollo Hospital with about 2.5% gains, nearly 3% gains for Apollo Hospital. Tata Steel with about 2.5%, given that the government has announced a safeguard duty for select steel products. And Power Grid also showing quite a bit of a resilience with about 2.2% gain. If you look at on the contrary picture, the top losers on the Nifty 50, that includes the likes of Tech Mahindra and TCS. So plenty of IT stocks have remained bogged down. Today morning, we did see out Citi note, which came out today, where they believe that despite IT index correcting 20% from its peak, it still remains expensive in relative to Nifty. So yes, quite a cautious note coming in for that front, and also certain tariff jitters, reciprocal tariffs, which Trump has announced, that is also keeping the sentiment bogged down in the tech space. Other than that, we can see ITC with about 1.5% cut, Infosys with about 1.4% cut, Britannia and HCL Tech. So FMCG and the IT stocks, the sentiment remain bogged down on those front too. But without much further ado, let's quickly get on board with our technical expert of the show. We have Milan Vaishnav, founder and technical analyst of Chart Wizard FZE. Milan, good afternoon. Third straight day of gain for the markets. Do you believe that we have indeed climbed the wall of worries, or do you just see this just as a technical rebound given the sharp sell-off we have seen from the past 5 months?
I would still like to see it as a technical rebound, and there are reasons behind it. Number one, that a couple of days ago, when the markets were forming the lows, it was the 100-week moving average from where the markets have rebounded. That is point one, and that level stands at 22,000 approximately. If I round off the figure, now that is point one, and on the way up, we are still very much ruling below the falling trend line, which starts from the highs that Nifty made, and then it continues lower, joining the subsequent lower drop. So what I see is that right now we are seeing a very robust technical rebound, and I feel that the markets may not retrace much, but they are certainly likely to take some breather around 23,000 levels.
All right, 23,000 levels. Nifty, you said that it's moved, but it's past that 20 DMA and in fact 40 DMA. 23,000 level, that is what you're eyeing for. But anything apart from that, after 23,000, once it reclaims, what is the forward looking, and what do you think about the Bank Nifty too? Do you expect it to sustain its outperformance?
Yes, see, Bank Nifty has been relatively stronger than Nifty. It may not be relatively stronger on day-to-day basis, but certainly on week-on-week basis, Nifty Bank continues to show resilience to the downsides. And if I feel that if this rebound continues to extend itself, then Nifty Bank might have got 400 to 500 points worth room for it on the upside.
Okay, all right. Milan, I've been asking this to everyone, and also I'm pointing out to you too. Broader markets, they've outperformed today the headline indices, but how do you find its valuations now? Do you expect the rally to sustain from here on, or do you just see this also as a short-lived bounce?
I'll give you a little bit of a longer answer to this, because there are multiple key points that I'm looking at. I'll still try to make it as short as I can. Number one is the market breadth. We have been declining with the falling market breadth. That means that in the declines, there were stocks from the broader market that were participating. That is one point, but that seems to be over now. And secondly, one more important component of market breadth, that is the percentage of stocks which are above the 200 DMA is hardly 12% now. And that level now coincides with the 2020 lows that the markets had formed. So I feel that there are all chances that the Nifty may ultimately come out of the secondary trend that it is witnessing right now and might continue to inch higher. That is point number one. Number two is that if we compare Nifty from a global perspective, India and the US have been the strongly and historically correlated markets. And with that, S&P has not yet comprehensively violated the 50-week moving average, which we have done way back in the beginning of this year. So I think so far as the underperformance is concerned, Nifty might have some room for itself to play catch up. I believe that 22,000 levels might hold for some time in the near foreseeable future.
Okay, all right. 22,000 you see for the foreseeable future. But Milind, what about the IT stocks? They remain bogged down, and there's certain tariff uncertainty also playing out in the tech space. Tomorrow we'll have a little bit more clarity on how the US Fed takes a decision on interest rates and the outlook he shares. But how do you expect investors to approach the IT space for the time being?
I believe that Nifty IT index per se has seen a good enough decline. Unfortunately, there is also a death cross that is visible on the daily chart, but that is always a lagging effect of the decline that we have seen over the past weeks. I feel that Nifty index might be in the bottoming out process. There are high possibilities that at least for now it might have put a base in place, and we can see some technical rebound in the IT space as such. And at least for the next couple of weeks, we can see some good relative outperformance from this space going ahead from there.
Okay, relative outperformance you do eye from the IT. Let's talk about now metal space. We did touch upon IT, but let's talk about a different picture right now. That is your metal space, because that has been quite shining. It has been outperforming past 1 month, and now with the safeguard duty on select steel products, where are you finding value in the metal basket?
I am finding value at a couple of places in frontline stocks like Vedanta, Tata Steel, Hindalco. And even if we now look at the Nifty Metal Index per se, it has attempted to now take out the 200 DMA. It is closed exactly just below the 200 DMA. And importantly, weaker dollar is contributing its part here. And we might see some resilience in the metal space continuing for the time being.
Okay, resilience you expect. But from a 3 to 6 months perspective, do you think the rally is going to sustain for the metals?
Sorry, I lost your voice in between.
No, I was asking from a 3 months perspective. Would you expect the outperformance for metals to continue?
Yes, I believe so. Yes.
Okay.
Unless the dollar gets significantly stronger, then it may not play out on expected lines, but otherwise, yes.
Okay. Quite a bullish statement coming in for metals too, also. But let's talk about defense stocks, because that also popped up in trade today. We saw the likes of Garden Reach, Mazagon Dock, Bharat Dynamics, all were quite buzzing. Garden Reach, especially 19% uptake. So, some news on Germany passing on a spending package for defense and infra spending also. We saw Europe coming out with its defense spending also. But how do you view the defense pack, given that, we did see that last year it had come off where, from its 52-week highs, it had seen about 30 to 40% correction. Now, do you find valuations attractive, or how are you viewing the space?
I find the valuation mixed. That is number one. And if we look at the Nifty PSC index per se, and look at it on its placement on the relative rotation graph, and if you benchmark it with the broader Nifty 500 index, I see that it is showing some improvement in its relative momentum. So we might see some stock-specific outperformance coming in from this space. Entire sector per se may or may not do well, but certain pockets, certain stocks are likely to do well with the likes of BEL, Mazagon Dock, HL, etc. Can do well, but not the entire sector per se. I would rather approach this space on a very stock-specific way.
Okay, very stock specific. Let's talk about capital market linked stocks also, because we're seeing a bit of recovery in the markets. If you look at some of the stocks like BSC, CDSL, and even Angel One, they have corrected about 30 to 40% from their peaks. What is your take on capital market stocks?
Capital market stocks, if I'm still invested in those stocks, I would continue to stay invested. They are likely to see some continued technical rebound, because there was a case of an overdone selling on these counters. BSC had taken a near vertical fall, CDSL as well. So some sort of small percentage of the rebound might continue, but these stocks continue to remain in the secondary downtrend that they are in right now. So we need to draw a line whether we should stay invested in that or might be using this technical rebounds to ultimately make an exit. At all depends upon what cost we are holding those stocks at. But so far as taking fresh entry is concerned, I would do it, but I would do it in small quantities and will not go out all at once to buy everything all at one time.
Okay. Milan, let's talk about defenses because we did talk about IT. I want to understand about FMCG and pharma. IT definitely because of the tariff uncertainty, they remain bogged down at this point of time. But what do you see for FMCG and pharma indices? Pharma also had some jitters, but plenty of them did diffuse such a tariff uncertainty because they expect India to remain insulated on that front. But what is your view on FMCG because that was expected to perform well after the budget?
I didn't get your question entirely. I lost the voice in between. But in any case, so far as FMCG is concerned, I think that I would like to allocate at least 1/3 of my overall market exposure to the defenses because stocks like IT, FMCG, and pharma will have to do well. And we can expect some renewed turbulence in the market if the global markets, by global I mean the US market, fails to sustain above its 50-week moving average. I'm talking about the broader S&P 500 index. If all these things happen and if this uncertainties continue, even we might continue to stay in the secondary trend that we are in right now. All we are seeing is a counter trend rebound, but we haven't seen any reversal of the trend. So I think these stocks have to do well. Pharma, IT, FMCG, we have to stay invested. We cannot discard all these stocks from the portfolio right now, especially with this set of technical setup.
Okay. Well, and you did mention that you're quite bullish on the discretionary space in the consumer pack. Any names that you want to highlight from there?
I'm sorry, I've completely lost your voice now.
No, I said that you did mention about discretionary space. So any picks that you have from there? I think I'm still not audible to you. Okay. Okay, Milan, with that, we have to let you go. But thank you so much for your time, and we hope that we connect with you soon.
I'm sorry, ma'am. I'm getting a different audio and different video.
Okay, all right. Probably we are not able to connect with Milan at this point of time. But with that, we have come to an end of this edition of Closing Bell. Thank you for watching, and do stay tuned to moneycontrol.com for all the news updates and market insights. Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lavisha Darad. Well, after 2 days of straight gains, the GIFT Nifty is once again pointing out to a positive start this morning. If you look at the pre-open rates, well, Sensex is up about 100 points, and Nifty is also up by 30 points. So yes, a flat to positive start for the Nifty, that is indicating in the pre-open, but we'll watch out whether this recovery is sustainable. But we have a mixed morning handover from the global markets. The Wall Street indices were down overnight amid sell-off in tech stocks. US futures were also flat ahead of the US Fed's interest rate decision. Now, the spillover was quite visible in the Asia-Pacific markets also, as mainland China and Hang Seng was down. But if we look at the Japanese markets, they were higher ahead of after the Bank of Japan kept rates on a steady note too. Now, so whether or not India can defy this global handover, which is coming in muted, is something that we need to watch out in today's trading session. Now, we'll take some stocks in focus too. Steel stocks especially is going to gain some limelight, as DGTR has proposed about 12% safeguard duty on select steel products. So Tata Steel, SAIL, JSW Steel, all of these stocks will be in focus. LIC also will be in focus, as the management did say yesterday that they do plan to enter the health insurance market. So we'll take up more as we go. Don't forget to drop in your stock related queries on our live feed, and we'll take them up shortly too. Before we move things further, let's take a quick look at the top headlines this hour. Stocks in Wall Street pullback resuming a sell-off after two straight winning sessions. The Dow drops over 250 points, while the S&P 500 and Nasdaq slip over 1% ahead of Federal Reserve's interest rate decision tonight. Stocks in the Asia Pacific is also trading mixed ahead of Bank of Japan's interest rate decision. Crude prices have eased by about 1% on the back of possible easing of sanctions on Russian fuel exports. Meanwhile, gold prices have hit another record high, with investors